Susan May.
Hi, this is Dawn. You're the first person on this morning.
Oh, Dawn, good morning. Hi. Wow,
Hi.
that's a surprise. Yeah, I went to your presentation at the Sportsman's Lodge at the Invest Club a couple weeks ago.
Oh, yes.
And
Yes.
that's what I'm actually retired, but that's what I have been interested in, investing, because I'm not doing well in the stock market. And I do have some money, cash, and I was just wondering, and I'll be attending your next seminar too, the one I think it's on the 11th, or the next one we signed up for anyway for the...
Right. Oh, for the all-day training?
That's it, yeah.
Wonderful. Yeah, that's actually about 3 months from now, on Monday, the 29th of October in Culver City. So it won't be far from where I met you. So I'm glad to have you along.
Thank you. Yeah, I live out here in the San Fernando Valley. And anyway, basically my interest is, I was so impressed with your presentation the other day and your knowledge and all that I was wondering if it's possible to say, give you money for private lending investments and stuff like that.
Yeah, that's what is actually the biggest part of my whole business plan. You know, it's a little bit of education, a little bit of consulting, and then just lots of buying and lending. And so
so I could do that then. I could actually make an appointment with you and come down and we could talk about investing.
Yeah, well, did you happen to see that investment opportunity form that I have on my site, on the Owner Financing Club site?
Oh, you know what? I didn't. I will go back.
Yeah, no problem. Yeah, there's a couple of buttons that say investment opportunities, and if you would, that's kind of my first a way to get started with an investor, because we want to get to know each other and make sure you know that these are sane. Well, for instance, I never want someone to say, "This is the last $50,000 I have to my name. Here, take it all." I never, ever, ever do that. It's just not the smart thing to do, because then if there's something that happens, or they need cash real quick, all of a sudden, it's not a great thing. So we need to get to know each other a little bit. And so if you will start with that, in a few days, I can. I have, after the speaking engagements that I had recently, I've got about a dozen people that signed up with Note Investors, so I'm reviewing their information, and then we're starting conversations to see what might be a good fit, like for a first go around, you know, what they're most comfortable with and all that. So are you in front of your computer right now?
No, I'm not.
Oh, okay. So if you wouldn't mind, or I could actually, I'm in front of my computer if you want me to send you a direct link to that form.
Would you?
Would that be helpful? I mean,
that would be easier, yeah.
Yeah, let me log into my email. I'm moving a little slow this morning because the nephews, my young adult nephews came in from out of town, and then with my kids, they were making quite a lot of noise till 4 in the morning.
Oh, wow.
Okay, what's your email address, Sue? Is it May?
SUSANMAY. That's my
Susan
name.
May, SUSANMAY.
And then the letter I after that, like Susan May, like Mother May I.
Okay.
Susan May I at Verizon.net.
Okay, link to sign up for Note Investments. Well, since no one else is on the phone, I mean, why don't we chat a little bit now? I mean, what's your background? We'll get to know each other now.
Well, I just retired about 3 years ago. I worked for LA County.
From what?
Los Angeles County Public Health, Communicable Disease Control. I've worked for the county since 1971. I have a good retirement, but throughout the years, I've also invested in real estate and the stock and annuities and stuff like that, and I've made a considerable amount of money on that. I have a lot of cash that is in various and sundry things now, but not doing real well. You know, not losing any money, but certainly not making.
It's not inspiring you at this point.
No, definitely not. Exactly. And now that I'm retired, of course, I have that. You know, that I have about $1 million to invest.
Okay, and you have some $1 million to invest, and your overall net worth, what would you say if it was on a balance sheet?
$1.5 million.
Okay,
the other
great.
being in real estate right now.
Okay, yeah, so you got about $500,000 in real estate.
Mm-hmm.
$1 million that you would consider fairly liquid, and are they in self-directed accounts?
No, not yet. I haven't done those. A lot of them are like in mutual funds, the stock market, annuities, with like UBS and Merrill Lynch and people like that. They seem to do fairly well for me, but I'm not real pleased with the overall. You know what I mean? Oh, and a 401k too.
Now, do you have like a? I'm just curious. The annuities. What kind of annuity? Not that I'm super educated on all the different types, but just curious.
It was with AIG, and I made money on that one, and I cashed in just before they went out of business. And then Merrill Lynch invested in something else, and honestly, I couldn't even tell you what it is. I just don't, track it that well. But it's one of the annuities they put me in, and I also have MetLife and.
Okay, so do you have some life insurance that has some cash value building with it and all of that also?
I don't have life insurance because I really don't need any.
All right, you don't need any. Okay. The only thing I've recently learned, like when people are diversifying across various asset classes, it's like I still think that, because of, I guess, the regulation clout that they have, some of these insurance companies, they've got it so that the cash value inside some of the life insurance plans is actually deferred, or it's tax deferred and protected, just like it's a 401k or IRA. And even in this market, they're getting 8%, and I'm like, I used to think I would never do any money with that kind of vehicle, but how can you argue with they have the clout to strong arm tax deferral out of it? So I have a little bit money there too, but I think a couple more people have come on. But Susan, let's you and I chat some more, because I think you're a really great candidate, and I want to figure out what's the best investment for you to start out with, and comfort level and geography and all those things. So I'd be just super happy to work with you and take a portion of what you have. So wonderful. And who else has come on the phone and wants to say hello?
Well, this is Peggy Hope Cohen.
Oh, Peggy, are you feeling better?
Yes. Thank goodness.
You poor thing. You came out when you were feeling sick.
I know, and I'm sorry. I'm sorry I was coughing. Probably making a racket on the tape of the.
Oh well, I didn't notice that part. I was too busy with my collateral and other sorts of.
That was a great program. Thank you very much for that.
Oh, you're welcome. So, what are you thinking about and working on this morning, Peggy?
Well, I'm just I'm trying to see. Well, I guess just the issue is that I'm not getting things accepted by note buyers. So. Okay.
So you're finding deals through your direct marketing.
I will find deals, and they get hung up somewhere along the line, and it's not uncommon that it happens. There's two things I see as kind of a challenge for me. One of them is that the Social Security numbers, that a lot of these guys did not get them when they signed up their notes. I mean, I see that happening. I don't know how common it is. I don't have a wealth of experience, so.
Yeah, I would say 50-50 for people who are not really, hip to what they should be doing.
Yeah. So, and then when that is a requirement in order to go forward, then sometimes I'll have somebody call me back and say, we're trying very hard, like I'm trying very hard to get the socials. They're very almost impossible to get through any other means if the people don't want to give them, buyers. So then I'm just sort of stuck in the water, and I just got a call from a lady yesterday that said, Peggy, I really like working with you and everything, but I'm taking this note elsewhere because somebody else says they can do this without getting all these socials.
Yeah. Who are you trying to sell to? Who's your end note?
Well, I think you know who I've been working with.
Right. So just him?
As a general, yeah, and just for it to go through there as of now. But I think my pool may be too narrow.
Mm-hmm. Well,
is a possibility.
So to me, I like to have socials, but I don't have to.
Mm-hmm.
But it may affect the price I'll ultimately pay or how I'll structure the purchase.
Right.
So I used to think too in the early days, it's like, okay, no. So in fact, I think I have that in my book is no social security number, no sale of the note.
Mm-hmm.
That's not 100% true because like I will, because if everything else makes uber sense, I'm not going to let that hold up. And if they don't want the mortgage interest deduction, I guess they don't want the mortgage interest deduction, but it's not going to hold me up from having security. So if you get a no from your preferred sources though, and I know he's been in business so long, he's got a really big list of private buyers, but sometimes people, because it's such a private investor conversation, there's a widely varying underwriting. It's not like the old days where there was a handful of basically large fund buyers for almost all the private paper in the country. It's like everything. It's gone small. So all I can say is if you get a no somewhere else, I don't ever want to take business away from him and that relationship that you have. It's just that if you're hitting your head against the wall, just what would it hurt? Let's chat about it, you and I, and see what if there's a way to make it have sense. So
yeah, that's what I was thinking too. The other thing is,
here's the gal that's just on the phone, Susan, Peggy. You may have been at the same meeting together. Were you at Studio City, Peggy, or?
Yeah.
So here's Susan. She's just saying, are you still there, Susan?
Yes, I am. Mm-hmm.
Yeah,
hi, Susan.
Says, I've got money. I've got money to invest, and you're saying I have deals I can't get funded. So this is what this community is for, so that we start learning from each other and hooking up our various resources, and just making sure that everything gets done above board, and protecting and being fair to everyone involved in the transaction.
Wonderful.
So, yeah, good. So Peggy, I hope that's a good first question. And can you pause on your second one till I see if there's anyone else on the line?
Sure. I'm happy to listen.
So is there anyone else that came on that has a question for this morning or wants to say hi or anything? Okay, well, let's go on. What else were we going to talk about?
Okay, yeah. The other thing is I just wondered about getting if you and your buyers have a two-step process for offering numbers, or just a one-step. And what I mean by that is, do you have an initial bid and then the bid changes?
Well, it can. Like, for instance,
I understand the problem there of needing to get more research done between a yes and a firm yes.
That sort of it feels bait and switch kind of.
It kind of does.
Yeah. So what are they telling you when they come back with a lower offer? Are they offering reasons?
Yeah, and it'll typically be because everything is reviewed. But what and then a price is. The price is the result of the considered actual value after all the paperwork is in.
Right.
Or but it's not as much the value in some ways. I think as the safety. I don't think it's based on the equity as much.
You don't think so? Because my biggest guess is what happens is people say their property's worth 100 and it turns out to be worth 70 or something like that. That's the biggest reason for an adjustment in a number, and I totally agree with that. When somebody's giving you just a verbal or an email, here's what it's worth, here's the situation, and if they misrepresent that or they're wrong on purpose or by accident, you can't help it because, as we know, as note investors, just like if we're hard money lenders, we're looking at what's the true value of the property and what's my maximum loan to value or investment to value, and that's going to be the most we can pay. So if the appraisal comes in, 20% lower, it's going to, almost 20% reduce the value you can pay for the note unless you buy it on terms. Just like, property gets sold for a higher price if you offer terms. Notes are the same way. If you let me buy it in small chunks, every 3 years I'll give you this much, or I'll buy just a partial and leave you the tail end. When there's some sort of terms with a note purchase, then I can keep my investment to value really super low and safe, which was my sweet spot's below 50%. I rarely am in at more than 50% of the real value of the property, which I just love. Because then if prices go down, if we do have more of a recession coming or depreciation in prices, I'm still okay. If I'm in at $50,000 on a $100,000 property and the property goes down to 75, I'm still adequate. Now I'm not at 50% investment to value. Now I'm at 75% or something, or 66%. But with the amortizing loans, every month they're paying down my principal anyway, so it helps me stay ahead of the protective equity game. So if the reason you're getting different numbers after, and that's like embarrassing for you to go back to your people with, probably that, I would guess, and unless there's a few people who are just out there to give random, high offers just to get the business, and then they do the real business. I don't think the guy you're working with is that kind of a guy.
No, I don't at all.
No, but there are some people out there like that.
Mm-hmm.
So, I know it's awkward, but is your
original
question what you have? I would probably prepare them in advance for this is the initial offer based on what you're representing. Of course, that we have our due diligence, just like anyone who's buying a property has due diligence. And look, if someone's under contract to buy a property for $500,000 and the appraisal comes in at $400,000, what are they going to do?
No, I totally appreciate that.
Right, yeah. So it's just, I think, creating a little bit of forward preparation for them to understand that if the numbers come back, this is a common reason why there's an adjustment, just so you're prepared and it doesn't seem like I'm being slimy.
Yeah. Okay. And you do 50%.
Usually I am. I mean, sometimes I'll go up to 60 or 65, but most of my notes are partials or staged buyout kind of things, so I'm really well collateralized. And that's why my new investors, like Susan's talking about coming on with some investment capital to make, some safe 8 or 9% returns, this is a retirement.
Right.
I'm not going to mess around with her money. Of course, there's always risk in everything, and everyone needs to understand that, there's no golden hammer or, universal guarantee. There's acts of war. There's natural, I don't know, if the whole West Coast falls into the ocean,
this could be a problem.
Or aliens abduct certain things. I mean, what are we going to do? But at that point, I think we have bigger problems than our notes not paying. So that's why we divert. Number one, I'm very safe in what we do, and number two, I diversify. I never put everyone's money in any one area, one deal. Usually it's spread across geographic locations for environmental reasons and economic reasons that can change rapidly from time to time. But, these are great questions. Is there anyone new that wants to say hello? We have another few minutes on the phone together. Anyone else come on? Okay. So great. So now we've got Susan and Peggy. We've been talking. Anything else that comes out of the conversation? What else should we talk about? Has everyone got their coffee? Hi, who's this?
Hi, Dawn. This is Malik.
Malik, great. Good morning. In New Jersey. Great. So you're having lunch while we're sipping on coffee.
Yes, to an extent, yes.
So, what do you have going on this morning?
I have a seller who is a tired landlord. She owns a 2-family.
So a duplex.
This is right.
Right. Okay.
Both both floors are rented out at $1,400 a month.
Whoa! So we got 2,800.
Right.
Gross
Now,
rent.
but here's
Okay.
the kick. Here's the kicker, though. Her taxes is $12,000.
Oh my gosh! Can you consider picking up the collateral and moving to a different state?
Sure.
Just kidding.
Sure.
Okay. Okay. 12. So we're talking 1,000. So these are just property taxes?
Yes. Yes. Yeah, New Jersey is
Wow.
probably if not the highest, one of the highest states when it comes to property tax.
Okay, so now we're talking 1,800, and then you've got hazard insurance and repairs. So let me ask you,
Right.
Malik, are you the potential buyer for the property?
That's potential buyer for the property.
Okay, great. And what does she want? She's tired, and what does she want?
She wants to be just done with it. She wants to sell it and be done.
Okay, so has she had it on the market, or how did you find her?
No, actually, I just sent a letter.
Oh, so some direct marketing.
Right, because it said it was in foreclosure, but she said she's not in any trouble like that.
Okay. Do you happen to know if she owes a mortgage, or is it a mortgage?
Yes, she does have a mortgage. She has a mortgage. It's a 15-year fix at 5%.
Oh, nice. And how far into the loan is she, the mortgage?
She's owned this for about 7 years.
Oh, wow. So we just got 8 years and it's owned free and clear. Do you happen to know how much her monthly payment is?
She said she pays just the mortgage because she pays the taxes and the insurance separately,
right?
So she gave me a roundabout figure. She's supposed to call me back today around 4:30 with the exact numbers, but she said about $2,300.
Oh my God, she's going negative then.
For the tax, for the monthly payment.
Yeah. So so $2,300. That's just P&I, principal and interest, correct? I'm trying to recreate the loan here.
Well, because she says the taxes and insurance she pays separate from the mortgage.
Right. So that means whatever her monthly payment is just the principal and interest on the note, right?
Right.
Okay. So if I put that into my little 5 buttons that I know how to work on my financial calculator, and then I solve for present value, which would be loan amount. Her original loan amount was basically $291. Does that sound about right?
Possibly, yeah.
What do you think the property's worth?
I haven't yet figured it out. She said 6 months ago it appraised at about 380.
380.
No. I'm sorry. She wanted 430.
430.
Then she went from 430 to 400.
Okay.
And then she went from 400 to 380. So I'm assuming that's about possibly where she said it appraised at 380.
So if I was just looking at and I had all cash to put in, I would go, I'm going to make, if I can pay $380 cash, let's see, I would make $1,800 a month, right? $2,800 minus $1,000, so $1,800. And then I've got to put some aside for reserve. So let me even be skinny about that. Let me take 75% and say I'm going to put it in my pocket. So let's say I'm going to put $1,350 in my pocket. Did you follow my thinking so far?
Yeah.
Okay. So now times 12, and that's how much money I'm going to get. $16,000 approximately for putting down $380. Let's see what my cap rate would be. My cap rate would be like 4%. So you'd have to be willing to, if you had $380 cash, you'd make 4% on your money for owning that property. So it's got to be someone who's happy with that. I know some people are. I know there's a ton of Asian buyers in my market that will sit for long periods at 3% cap rate, just because they have. Yeah.
Again, I would have to, borrow the money, not necessarily get a mortgage, but borrow the money, and then, I have an investor that's looking to do deals with me, but who has
so this doesn't seem like much of a deal. This is like for an old person who has too much money and they need to land bank it, or just put it, because there's no room for you to pay private financing on this. This is if you have no debt service at all. Like here's a good thing. Like you can't even take it subject to the existing financing without taking a loss. Do you see what I'm saying?
Right.
This is a negative cash flow situation. So even if she gave you the property and you just had to take over, you need an investor who just needs a tax shelter against their W-2 income to take real estate losses. That's how much this doesn't make sense. It's not because it's a bad deal. It's just if you have someone who can come in with you, because in 8 years it's going to be owned free and clear, and then it's a cash cow, right? Then it's a cash cow. So it's more like some sort of partnering with that lady to leave her existing financing in place so that you can leverage that. That's crucial. Because now, like if I let me see what her loan balance probably is right now. I'm just going to take a stab. Okay, where's the amortization? I'm working with my different calculator this morning. Okay. So you said we're 7 years in.
Yeah.
So at 7 years, her loan balance right now is probably only 181. So we're good at. It's pretty low. It's only, and in 8 more years it'll be gone. So, but if you can keep that in place and say, look, lady, we'll take the negative cash flow off your hands for you, but you got to leave your existing financing in place, and then you get a partner who needs a tax shelter, who's in the 35 or 40% tax bracket with W-2 income, and they can offset it with these losses for the next 8 years, and then you guys have a free and clear property. That's my only play for that one that I can think of. Any other comments from anyone else on the line?
So the key would be to get her to leave the existing finance in place.
You don't want to have to replace 5% financing.
Right.
That's nice.
Okay.
And then you got to find someone who needs a tax write-off, losses, to offset ordinary income. And there are those people out there. They make $200,000, $300,000, $400,000 W-2, and so their taxes are through the roof. They need losses like these that make sense, because eventually this will lead to free and clear duplex. You see what I'm saying? I had someone call me on a similar type of situation here in LA, where he's got a fourplex by USC, and he doesn't have a lot of equity. And I said, so his is even a negative, like by $600 a month. And so either I got to find someone who needs a write-off. But the better way for me, in his particular situation, he's got a first and a second, but the second's eating him alive. It's taking all the cash flow. And I said, you'd have to be willing to leave your existing financing in place and to do a strategic sort of default with the second so that we can negotiate better terms, or like buying it off at 10 or 20 cents on the dollar, which is common, buying non-performing seconds behind performing first. And so I go, but that's going to ding your 800 credit, and I know that's going to hurt your feelings, so you got to think about it. But, how long can they afford a negative cash flow situation? They're not that far away from some hiccup in their finances where they have to do a short sale anyway, or something that's going to ruin their credit. So
yeah, because I'm showing here that she paid $379 for this property, and
7 years ago at the height of the market.
It says September 6, 2002.
Yeah, I mean, for her, she should be happy to get out from the negative or just to pay, instead of $1,000 negative a month, maybe $500, and you split the negative. You still make her go negative, but I would put it in a trust. I'd probably use a land trust entity to create certain shares of beneficial interest that she stays sort of in the deal, and she needs to contribute every month, because maybe she has to go, like I said, instead of coming $1,000 out of pocket every month for repairs and insurance and other things, maybe she only comes out half of that, and you take the other negative and bring in someone who needs tax write-offs in the meantime, and then after you own it, after it's paid off free and clear, then the other lady's out of the picture, and you and your friend split the cash flow, or maybe the other gal will want a little piece of it or something. So it's kind of complex. It's not like a real low-hanging fruit for an obvious, wow, this is a deal smacking me in the face. It doesn't feel like that.
Mm-hmm.
You'd have to get real creative. Does that make sense? Did you follow kind of my...
Yeah, but I was wondering, I guess so, because I was wondering, that's the only best thing, right? Not necessarily doing a short sale on this.
Well, yeah, sure. That would be another good, if you can get it for, half of what she wants it for. Basically, it won't be a short sale if she only owes, if she's not behind, she owes 181. Probably someone can come in, and she'd just have to walk away from any equity she thinks she has.
She was saying that she doesn't want to sell it for, I guess, what she owes, what her balance is.
Okay, well then she wants to keep paying negative cash flow every month. And if someone doesn't really need to sell at a discount, you can't really get a deal. There's got to be some financial motivation for her. So I would personally just stay in contact every 2-3 weeks or something, just checking in, see how it's going. Because if you can get a partner to come in and pay, 200 or 190 cash, probably that will make sense.
Because I was thinking maybe offer her half of what she's asking for now.
Yeah, that would be about what the numbers look like. Is you're basically saying I'll take over the mortgage and that's it, and you need to walk.
Right.
Right, but even then you're going to have a negative cash flow. So you got to have someone on your side who wants to partner with you to take the write-offs and the losses against their ordinary income. Does that make sense?
Yes.
Yeah. Okay, great. Any comments from anyone else on the line? I know we're past the 9:30 mark here, so we're going to be wrapping it up. Thanks, Malik, for coming on, and Peggy and Sue. Anyone else just want to say hi real quick before we end the call today? Okay, great. So
I have one more question.
Sure. Let's finish up. Just one more question.
Does it make sense to, I guess, market to absentee owners or own properties free and clear in order to structure?
That's one of my favorite target markets, is the ones who aren't right there. They have to pay for property management from long distance, and they have a lot of equity, because usually that means they have, they bought at a price where today's market isn't going to offend them near as much as someone who bought in 2005. And they would be willing to carry a lot of times just for estate planning purposes, to defer capital gains and to have income rolling in. That's better than a CD at the bank or something like that, or any. Hey, Susan, are you still on the line?
Yes, I am. Yes.
How much do you make on the annuity? Just out of curiosity, what rate of return do they get you on those super safe annuity type investments?
I'm not really sure. I'll tell you what, I'll look and I'll email you though.
Okay. Yeah, it might be. I'm guessing it might be in the 3 to 5% range. Does that even
probably
sound...
not more than that? Yeah, I'll bet you.
Yeah. So someone who owns a property free and clear, they might just be happy to carry for 5, 6, or 7%. Take a nice big fat down payment if they can, and then they're making more and deferring capital gains along the way. So less of their money is given off to that nasty old tapeworm we saw in my presentation. So anyway, so yeah, Malik, I think, and I'm working with other people in various parts of the country who that's what they are marketing to. A gal from Texas and her coaching students that she has, they're switching to doing that, as well as they like subject to deals. And in fact, just to let you guys know, my next guest speaker, all she does is subject to in Utah, and she's not making a killing on any one deal, but she's got so many deals going on, and actually approval of the banks. So she doesn't even have to worry about due on sale or anything like that. So it's a really unique product, and how successful they've been with that. Just I want people to have that tool or that thought in their mind for how to put a deal together. But the free and clear stuff, there's so much flexibility because you can do cash, you can do owner carry, you can have them carry paper and then sell it so they get more cash at closing. And I love coming in that, because if I'm deal smithing it or putting it all together just the way I like, then I can structure it for the maximum financial value to the seller of the note instead of coming out afterwards. So like if you started, Malik, mailing to those people, and you're saying I just want to put 10%, right? Yeah, free and clear, and you say I'd like to, and you get them on the phone and you say I'd like to pay 10% down. So let's, for math, ease of math, $10,000 down on a $100,000 property, and that's what would make sense to you. And they said, we really would do that, except we need, we need to clear $30,000 at closing. So I'll come in and I'll structure a note, or we'll make two notes, or I'll buy a partial of one. So what I'll do is come in and figure out how can I bring in extra. You want to bring in 10, they need an extra 20. How do I bring in an extra 20 at closing? So we're talking a simultaneous note sale, green paper, and me still feel safe, and the seller still, when they look at the numbers on paper, feel like it's a good deal to them, and it's not, making them have a huge, big, fat old discount. So that's a way to get a yes from someone who says no to 10% down, not because of they want you to have more skin in the game, just because they need more cash for some reason,
right.
So there's more room to play with a variety of things. You could even do lease option with them. Sometimes they like that better.
I was just about to say I would kind of
right,
like
so that you can only put down 3 or 5% of an option fee, something like that, and control the property for. But I think overall we have to be careful. Like all our numbers have to be pretty solid, because I think there's a good chance there's still some downside in the economy because of jobs and or other larger things falling apart. So we have to cushion whatever we think. I'd never be on the edge of like I'm really keeping my fingers crossed that the market recovers in 2 years. Don't bet on it. You got to be in for the long-term hold, and to have, like, say, if you go, okay, I'm going to get $400 positive cash flow off this. If that gets cut in half, you got to still be okay that you're doing the deal and it's worth your time and risk and sweat equity and all that. I think they're just shipping jobs overseas. So, at some point people aren't making as much, right? And they're running out of the money that mom and dad left for them or whatever. I don't know. There's a lot of great things going on at the same time. It's like, to me, here's what I think of. Have you anyone on the line ever lived in their house while they're doing a big remodel, like in their kitchen or bathroom?
Yep.
Doesn't that just seem like the worst thing ever? Like,
it's pretty hard to live with.
Drive you crazy, right? Total chaos. You're grouchy. You want to just bite everyone's head off. To me, that's what's happening in the global landscape, where we're in the midst of a really large remodel, and it's going to be uncomfortable. And I think we're coming out. I think things will reorganize really beautifully, especially as we talk about working with each other and doing community-style investing is what I guess I would call it too. Like one real person, one mom and pop to another mom and pop. Not a whole lot of big institutional plays, things like that. That's what I like, because that's the real economy. Me helping my neighbor them helping me. We all need each other. We need the tenants, we need the buyers, we need the sellers, we need the lenders, and if we're all normal people playing these parts, it's more like a family instead of, oh, well, those big banksters or this or I don't know, just my little soapbox. But so my only point in saying is that we do need to pat ourselves against a little more shakeout in the remodel as I think things settle into a higher, what I would consider a higher vibrational plane of economic activity. So anyway, well, thank you so much for spending the morning with me. I appreciate. Hope you got a little bit out of it. I love talking to you, and please follow up via email if there's other things that we didn't get to cover. So you guys have a great weekend, Susan, Peggy, Malik. Okay, take care.
Thank you, Dawn.
Thank you.
Thank you very much, Dawn.
Okay, bye-bye.